We would say that there is a flight to safety, certainly led by crypto assets, and it is telling us that the world is transforming and will continue to transform. You cannot stop innovation.
Cathie Wood is a well-known American investor and the founder and CEO of ARK Invest, an investment management firm specializing in thematic investing. Wood is known for her innovative approach to investing and has gained a reputation for being a successful stock picker in disruptive technology and other innovative sectors. According to Wood, Bitcoin and Ether are no longer risk-on assets but are serving as safe haven assets as the global economy becomes increasingly turbulent. During a recent episode of ARK Invest, she likened these top two digital assets to gold, highlighting their role as safe havens despite being known for their volatility. Wood also emphasized that crypto assets are leading the disruption in the world's order and that the innovation of blockchain technology is unstoppable. In her tweet, Cathie said, "Why have Bitcoin and other crypto assets appreciated during this banking crisis? In our view, and in contrast to those in the traditional financial world, many crypto assets face no central points of failure. They are decentralized, transparent, and auditable." Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
I think the most remarkable of all the indicators that we monitor was Bitcoin during the crisis. Now, it typically acts like a risk-off. It tends to do poorly during risk-off periods. This time it did the opposite. From March 10th, when it bottomed at 19,500, it has soared 55% to $30,270. Ether has gone up 51% from 1,370 to 2,076. So these previously volatile, risk-on metrics are acting like flight to safety. Well, we think this is a theme that you should be watching out for. We think a lot of innovations out there are going to be the flight to safety. Why? Because they're going to disrupt the traditional world order. What are Bitcoin and Ether doing? They are, by the very fact that they're being considered flight to safety, like gold, that's really interesting and suggests much broader based adoption and acceptance than I think most people understand. And given the governments railing against crypto and really putting pressure in all kinds of regulatory ways on it.
Although the rally in technology stocks has been losing steam, they have played a crucial role in driving the stock market higher this year. Cathie Wood has been a firm believer in the potential of the tech industry to propel growth in the broader market, as exemplified by the Nasdaq and S&P 500. Wood frequently discusses the disruptive potential of technologies such as artificial intelligence, blockchain, and autonomous vehicles to transform various industries and generate significant returns for investors. She views the Nasdaq as a reliable barometer of the tech sector's overall health and has expressed optimism about its long-term prospects. Additionally, Wood is bullish on the S&P 500, which she considers an excellent benchmark for the wider market. Wood tweeted that after the bear market last year, perhaps equities are beginning to discount much lower interest rates. Pointing to lower real growth and inflation, the fixed income market seems to be ahead of the Fed, suggesting that equity valuations will not succumb to last year's fears.
All three major benchmarks in the United States, the Dow Jones Industrial Average, S&P 500, and the Nasdaq, all of them are up this year. And in fact, the Nasdaq is up the most, and that's considered the most volatile of the three. And if you look at if you look at the sectors as they're defined by GICS, you'll see they're risk-on sectors that have done very well. Communication services, which includes a lot of the FANGs, up 23%, tech generally 19%, consumer discretionary up 13%. That's year to date. On the losing side of the ledger, financial services minus 4.5%. This is in the S&P index. Utilities minus 2.6, and healthcare minus 1.4. So financial services, yes, have been hit by the crisis. That makes sense. Utilities are coming down because the interest rates are coming down. As I'm thinking about it out loud, that should be helping. The dividend yields in utilities have less competition. So that's a curious one. Except that utilities are typically a flight to safety, and the market's not acting like there's a flight to safety. And healthcare has also underperformed. That tends to be a defensive category as well. So what might explain this? Well, it could be that the market paying attention in all its wisdom, even if the Fed wasn't, the market was paying attention. We were in a bear market last year, and the market was saying something's going to break here. And now we know what it is. Is there a buy on the news, or a buy now that we're near the end of this? As I just mentioned, I'm not sure we're near the end of it. I don't know why deposits are going to flow back into the banking system, given current dynamics.
According to Cathie Wood, despite the Federal Reserve's policy of aggressive rate hikes, a soft landing for the U.S. economy seems likely. However, Wood is preparing for a hard landing nonetheless. In the meantime, she is not hesitant to invest in the equities she believes in, regardless of the macroeconomic backdrop. Wood has also contended that technological innovation and deflation can be advantageous for companies that are disrupting conventional industries. These deflationary effects of technology can help such companies thrive.
If we are about to experience, some people would say soft landing. I find it hard to believe this will be soft, but soft or hard landing, what that will mean is inflation and interest rates are going to continue coming down, and the Fed will follow them finally. The markets always lead the Fed. So that could be what's going on here. If you remember what happened, our strategies, innovation-based strategies, they started underperforming in February of 21 when the whiff of inflation and interest rates going up with supply chain issues started. And the market just started discounting, saying, oh, interest rates are going to go up at some point. This category of stocks is not going to do well. Well, we could be on the flip side of that, because it does seem like innovation-based strategies have done very well. When it comes to fixed income markets, the 10-year Treasury bond yield peaked in October last year, 4.3. It did get to 4.1% in March, but then the crisis took care of that. And we're now down to roughly 3.5%. So we're down to 3.5%, perhaps because of a flight to safety, and perhaps because whatever kind of landing this is going to bring with it lower inflation and interest rates. And if deflation is the risk, that actually accrues to the benefit of stocks that do well during deflationary times. And that tends to be technology. Technologically enabled innovation is deflationary. Now, the yield curve is telling us that we're not out of the woods yet.
Cathie Wood has suggested that the recent developments in cryptocurrencies could be just the beginning of their transformative impact on the global economy. While Wood has gained attention for her investment picks and market outperformance, it's important to note that investing always entails risks, and not all of her picks have been successful. That's all about today's analysis. Do you agree with Cathie Wood's perspective about technology and performance stock, Bitcoin, and Ether? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.